Markets are crashing. Do you have recession fears? Should you have recession fears? Let's talk about how bad things are getting out there. Stick around, because by the end of this, we'll take a look at a chart together about what recessions do to real estate prices. Yeah, almost the entire investment world seems to be crashing, except for good old sticks and bricks on terra firma real estate. Part of the paper and digital assets sell-off has to do with the fear of an economic recession. Hi, I'm Keith Weinhold. This is GRE. Though it's an increasingly germane topic, recession prospects really carry quite a wide disagreement among economists and others. And you know, it's funny how the world works. Inflation keeps running hot. In fact, the latest reading shows us that inflation was 8.3% year over year. So before we talk about stocks and real estate and what this does, you know, one would think that persistently high inflation readings like we've had would be really good for some of these inflation hedges like gold and cryptocurrency. Well, instead, exactly the opposite is true. These things are forward-looking, much like stocks are. So therefore, rather than these assets responding positively and going up in valuation due to more inflation, rather what they're doing is they're reacting to what the Fed is going to do about the inflation. They're reacting to the higher interest rates. That's why they're going down, even though they're inflation hedges classically. Their values are shrinking faster than Lake Mead. Well, too much of this, that's what could lead to a recession. The S&P 500 had its worst 1/3 of a year since 1939. The Bitcoin price completely fell over Niagara Falls, down at times more than 60% from its high last year, more than 60%. Some major companies are pretty concerned too. I mean, no one at these companies is sitting around and asking now where can we spend more money than we absolutely have to? In fact, Meta, who is the parent company of Facebook, they decided to install a hiring freeze across most of their engineering units. Amazon executives said that they are worried about their warehouses being overstaffed. Carvana recently laid off 12% of its workforce. And see, a lot of these things, these actions, that can effectively make a recession a self-fulfilling prophecy. On 2 recent days, oil was down 10% just based on the fear that there's going to be an economic slowdown and that there'll be less demand for oil. So some market experts believe that we're already in a recession, but really that was a lot of the bad news that I'm giving you. Others see mixed signals or even good news. A lot of employers are still hiking wages in order to attract workers, and they need to hike wages when, and this is so crazy, we are at a time now when there are twice as many open job positions as there even are available workers. It's like the opposite of a high unemployment situation. And when stimulus savings run dry and the federal student loan moratorium repayment period ends on August 31st, if it's not extended again, when those things transpire, people are gonna snatch up those open jobs. They're gonna have to. So what is a recession anyway? Well, I'm not talking about something that glaciers do. I'm not talking about worries about my hairline. A recession is when we have 2 consecutive quarters of GDP contraction, 2 straight quarters of declining GDP. Now, we've already got the first one of 2 when GDP contracted 1.4% last quarter, but a lot of economists and others feel that that was an aberration for a whole bunch of reasons. And you might know the joke. What is the difference between a recession and a depression? A recession is when your neighbor loses his or her job. A depression is when you lose your job. From my view, the prospects of a recession this year, they are real, but they're not highly concerning. So then if it's not about my hairline, then where do you look for signs of an economic recession? Economists say you would find a surge in unemployment as a chief indicator as to what would lead to a recession. And as a rule of thumb, if there's an increase in the unemployment rate of 0.3% or more on consecutive 3 months averages, a recession will follow. All right, so let's look at that. The unemployment rate began this year at 4%, and it has since come down to where it is now, 3.6%. So with all of these job openings, higher borrowing costs first have to curtail this glut of open positions until unemployment can rise substantially. Hey, well, before I discuss where this leaves real estate, go ahead and put a like on this if you like some of this material. If you're learning something here, I'd really appreciate the like. Real estate keeps plowing forward for now, seemingly unfazed from any sort of market correction. And you know, I like to cite history to look at what might happen in the future. History doesn't tell us everything, but history is often a forgotten piece, which is unusual. Real estate is slower to respond to broader economic change than stocks are, and I'll show you shortly a recession in the broad economy that rarely, if ever, creates a real estate bear market. But what if it did pour over into real estate? Let's get a little bit unnecessarily dour now. You know, there's a reason that you are invested in the best risk-adjusted asset class, which is what real estate is. But let's say that somehow high unemployment did indeed lead to a recession. Let's play that out. Worse, let's say that extreme market forces just trumped this fact of this chronically low housing supply that we have, and it even led to a property price erosion this year. Now, I'm playing out a really unlikely scenario right now, but if that happened, you know, the say $5 million trophy property is probably in trouble. That's probably going to lose more value than other properties. But you know, at these investor advantage price points closer to the median priced home that we focus on here, those rental properties and stable markets here at GRE, you know, you got to ask yourself, even in this unlikely scenario, could your $300,000 property, could that even drop down to $275,000? Now that we're in this era of really constrained supplies and materials and really constrained labor and what many feel are permanently higher land prices, could a property even fall from $300K down to $275,000? You know, that's really doubtful even in that dour scenario. But if it did, actually that would be an 8.3% loss. That's what I told you earlier that the current rate of inflation is. And you know, in investing, the word guarantee is a rare word. It's almost taboo. It's almost a word that you shouldn't use, guarantee. But you know, one thing is for sure, that owning $1, holding on to $1, that's a virtual guarantee that you're losing prosperity, that you're losing purchasing power, currently at a rate of 8.3% year over year. You're guaranteed to be holding a depreciating asset with $1. And you know what? You can't even say that about the latest meme coin. You can't even say that that's guaranteed to lose value like the dollar is. So it really makes complete sense to banish excess dollars. And with recession fears, you know, some investors get sort of leery about going out too far on what we call the risk curve. But historically, again, what holds up in recessions are cash flowing investments that are essentials, that are non-discretionary, that provide what people need. We're talking about food, housing, and energy. Those are the resilient three. So let's go ahead and take a look at this chart. This chart shows us the median sales price of houses sold in the United States. Notice those gray bars, those gray shaded areas indicate recessions. Note that this chart is not inflation adjusted. And you'll see that since this chart reaches back to the early mid-1960s, we have had 8 recessions since the early 1960s. Notice that latest one was a short one in 2020. That was the pandemic-fueled recession. So if we look at what happened to house prices in a recession, house prices were about even or rising through every single one of these 8 occurrences, except for 2008. You know, 2008 was when we had these extremes. We had a high housing supply and woefully irresponsible lending practices. All right, well, what happened then amidst that awful crisis? Okay, at the beginning of that bad recession that was housing fueled due to those strange forces I just talked about, the median house price was $234K in the beginning, and $214K by the end of that recession. So that's the worst one that we can find. Again, with recessions, home prices typically stay about the same or they rise. Of course, today we're in a much different scenario. If we would fall into a recession, now we've got an astounding dearth of housing supply and we have responsible lending practices. So even if we did enter a recession, which is pretty unknown right now, again, I don't think it's likely this year, waiting to purchase housing is going to cost you more in the future, more likely than not. So you want to be in housing, food, or energy because there is demand for all three of those things. That's how you want to position yourself if you think a recession is coming. And you know, of those three, housing, food, and energy, housing is the one where the supply is more difficult to bring it back into buoyancy and make supply and demand factors be balanced again. That's the most difficult one in order to bring that back into balance. That's why upward pressure continues on real estate, and it will continue to, even with the prospects of an economic recession. That's what housing does, showing you historically how it's performed well and why it's performed well. Properties are scarce, but we do have some at GREmarketplace.com. This is where you can take action and build financial freedom. Here you find investment providers that we work with, many whom I buy properties from myself. And these investments include turnkey rentals. Turnkey means a property that's already rehabilitated, already has a tenant in it, and the company also holds it under management for you. Agricultural real estate, private lending, and more. So just create one login, one time for access to all of our providers at GREmarketplace.com. I hope you learned something about recessions. I'm Keith Weinhold. I'll see you in the next video.